The last year has been anything but bright and shiny for silver stocks. Randy Smallwood, CEO of Silver Wheaton, is here to tell us if the tide will turn anytime soon. Welcome, Randy. Now,
Glad
your
to be here.
stock is down 11% in the past year. Silver, the metal, is down 13%. How tightly correlated are the two?
There is no doubt we are strongly correlated to silver and the silver price. We've got a bit of gold in our mix now too, so it does diversify us a little bit, but precious metals as a whole are down a bit, and that's going to pull us down too.
Well, if the economy is recovering, so I hear, and silver is an industrial metal, shouldn't silver be moving up as well? It's been fairly stagnant lately.
Well, it's not only an industrial metal. There is about half of it gets consumed on the industrial side, and the rest of it's on the investment side. There's no doubt that the investment side, the store of value side, does have an impact, and of course with the price coming down a bit, a little bit of lack, lighter investment in that. We do measure it in U.S. dollars. The U.S. dollar is showing some strength here lately.
So similarly, if we are getting this currency war that everyone's talking about, that should be good for silver also. Why isn't it moving?
I do think it will eventually. I mean, at the same time, when
it moves silver.
Oh yeah, no. The fundamentals, the fiscal challenges that all these governments, like the United States, in terms of balancing, they're printing dollars to get it out there, and so that strength into the precious metals will come.
And why a streaming company like Silver Wheaton as opposed to investing in a silver miner? Now, silver miners have been battered, or buying the SLV, which is the ETF. So why do I want to own a streaming company like Silver Wheaton?
Yeah, the challenge is the traditional silver mining companies have, over the last while, had some real challenges with respect to delivering margins, which is in the end what you're investing into companies for, is those margins. They've had a lot of cost challenges as inflationary pressures kick up all the way through the industry itself. Silver Wheaton, our costs are fixed by contract. We don't have any of those cost pressures. We deliver on the cost side. You get full exposure to the commodity side, hence why we're so tightly tied to the price of silver.
And which mines are you exposed to? Where are you looking? Because you got to be careful when you choose the mine you're going to associate yourself with.
Well, and political risk is very important to us. We do focus in the Americas and got a few assets in Europe, but we've got some large assets. We just did a deal a couple of weeks ago with Vale. We just closed it actually this week with Vale on a couple of top-notch, one very big copper gold mine down in Brazil, where we get a 25% of that gold going forward. But we also pull silver from a lot of the mines down in Peru and Chile. We've got assets in Mexico. We've got assets in Canada and the United States.
So if there is a catalyst that will drive silver higher over the course of the rest of this year, what would it be?
Weakness in the U.S. dollar. Eventually, printing all those dollars. Continued challenges on that side. That's usually what drives it. There is increases in demand on the industrial side. We do see silver is one of the best metals out there in terms of efficiency of transmitting energy. Right. And so we do see that coming all the way across. But it's really strengthening that U.S. dollar, of course, is what drives strength or weakness in the U.S. dollar is what drives the price of silver.
We're going to watch it. Thanks for coming on.
Thank you. Good to be here.
Thank you for watching The Street.